Let's dive deeper now into the action with our markets reporters. Abigail, what are you watching?
You know, Joe, so Caroline and Scarlett were just talking about the fact that we don't have the S&P 500 above 3,000 on the close, even though it had been there intraday. Even so, this range chart that we've been looking at for months, weeks, it is starting to turn bullish. Take a look at this. The range I'm talking about roughly between, let's call it 2,600 and 2,800, and goes way back all the way to the beginning of 2018. There's last year's big volatility, this year's rally. But since the rally stalled in, let's call it April into May, we've been stuck closer to between 2,800 and 3,000. This range, though, is starting to turn bullish because note the higher lows. One of them put in just over the last 2 weeks or so. We also have a rising 200-day moving average. That tells you that the trend is up. The long-term bulls are supporting the market. And we also have an RSI caught in a range. But, Taylor, it appears that it's close to making a breakout to the upside. Should this work, we could see the S&P 500 climb, according to some of our recent smart charts guests, toward 3,100, maybe even 3,200. Right now, again, this chart is starting to turn bullish for the S&P 500, maybe suggesting the earnings season will remain pretty positive, Taylor.
Well, Abigail, from the S&P 500 back on over to the stocks, all eyes for me continue to be on the chip makers. And you've seen some relative outperformance recently. The stocks, of course, today closing up about 2.2%, beating out the S&P 500. A lot of underlying companies driving this. NVIDIA is hitting an 11-month high after getting a street high price target from B of A. And other companies like AMD, Intel, which have exposure to Apple, those keep pushing the index higher after we keep hearing about strong iPhone 11 demand. And so what that means is if you come and take a look at a chart here that I'm showing inside my terminal, is we're measuring the outperformance of the stocks relative to the S&P 500 at a ratio here of about 0.54 or so. You're getting very similar to levels that we saw in April. Otherwise, you have to go all the way back about 18 years to the dot-com bubble to get this type of big outperformance of the chip makers relative to the S&P 500. As you know, as long as trade talks continue to go relatively well and sort of stay on the sidelines, some of this outperformance is likely to continue. Renita.
Thanks, Taylor. I'm going to pick it up at the micro, looking at Bloomin brands as it sunk as low as 7% during the intraday after Deutsche Bank downgraded the stock to a hold from a buy. This is on, quote, lackluster casual dining, the lackluster casual dining industry data during the third quarter of the year. Right now, Bloomin's average price target is at $21 a share. And analyst Brian Mullen also cut his third quarter comparable sales estimate. And if those comps come in below the consensus, he said Bloomin may have to lower its 2019 forecast. And now the company is expected to report its third quarter results further toward the end of the month.